Hi, I'm Anna Nichols. I'm the Director of Communications at Altair Advisors, and welcome to today's program on the benefits and applications of annual exclusion gifts. And joining me today is my colleague, Katie O'Hara, the Director of Financial Planning. Welcome, Katie.
Hi, Anna.
And we're excited to come to you and talk about this topic because we often get clients that come to us and will say something along the lines of, we'd like to help our adult children financially, but we're not sure the best way to go about that. And one of the first things we're going to ask them about is, are you utilizing annual exclusion gifts? So Katie, can you kick us off today and just describe what do we mean by that? What are annual exclusion gifts?
Sure. So the simplest definition out there, Anna, is annual exclusion gifts are the amount of money that you can transfer from one person to another without paying any gift tax. So in 2024, that amount, the annual exclusion amount, is $18,000. That's actually up from $17,000 last year. So $18,000 for an individual. If you're a married couple making a joint gift together, it's $36,000. So let's take a look and walk through an example of what that actually means. Let's say you have 5 grandchildren, Anna, and you and your spouse, you're married, want to make an annual exclusion gift to each of them. You could actually give away $180,000 in total, so $36,000 per person with both spouses, without exceeding that annual gift exclusion. So it's a great way to transfer assets out of the estate without utilizing any of the exclusion. Now, what happens if you do make a gift that's a little bit larger than that, Anna? If you exceed it, what it means is that you would need to file a gift tax return with the IRS on the amount of the contribution over $18,000. And basically that extra amount would get added towards your lifetime gift exclusion. So the gift exclusion is a little over 13.6 million in 2024. So as long as you haven't eaten through that exclusion at all, you wouldn't actually owe any gift taxes. And then this slide that you have up here is great. These are a couple quick reminders that I just want to touch upon real quickly. So gifts between spouses are unlimited. This question does come up from time to time. So if you give a significant amount of money to your spouse, that's not going to trigger any type of gift tax or gift tax return. Gifts to any qualified nonprofits, charitable organization, etc., those are not considered gifts. And then the person receiving the gift, Anna, doesn't need to report the gift. So assets that you receive as a gift or inheritance typically aren't taxable income. So I just like to point that out because that question does come up from time to time. I know we're still very early in the year now, but if you are looking to have a gift count for the 2024 calendar year, it is important to make sure that that gift is completed before December 31st. And that goes not only just for 2024, but any year in general. I know a lot of people typically wait till closer to the end of the year to start making significant gifts. Not always, but sometimes. So in the event that happens, you just want to ensure that the gift is actually executed before December 31st.
Okay, good to know. Let's talk a second about what qualifies and doesn't as an annual exclusion gift, because sometimes I'll hear from people like, well, we gave our daughter a car last year while she's at college, but then we're also going to be making, a gift. And it's like, whoa. I think we have to think about, what counts as towards that 18,000 a little bit.
Sure. Yeah. So that's a good point. So not everything is going to count for an annual exclusion gift. So to qualify, what the IRS says is a gift must be a gift of present interest property. So Anna, that means it needs to be something that the beneficiary can access and use immediately. So things like cash, stocks, bonds, cars, lands, etc. An example of something that would not qualify is going to be a gift. This is a good example. A gift in a trust that benefits the beneficiary only if a trustee makes a distribution from the trust and it cannot be readily accessed. So that's an example of something that would not be a present interest in property. So big picture, we want to make sure that it's something that can be used and accessed immediately. Another thing that I do want to point out here is that contributions to 529 plans also count towards the annual exclusion. So I point this out, Anna, just because if you are making annual exclusion gifts to kids or grandkids, you will need to be mindful to make sure that you don't overgift and exceed that $18,000, or if you're married, $36,000 per person. So good idea, good rule of thumb. If you're making multiple gifts, might not be a bad idea to put together a little Excel spreadsheet and just keep track to make sure that you don't go over that annual limit.
Okay, so if you're giving to their 529, if you put 5,000 in there, you can't also give $18,000 the individual. You've got to take 5 off of that. in order to stay under
Correct.
that.
If you don't want to eat into your federal exemption. So if you want to keep it below that threshold, yes, absolutely make sure. I know sometimes too, individuals and families are making large contributions to 529 plans. You can do something called a super fund, where you can actually gift up to 5 times the annual exclusion amount without utilizing any of the exemption. I'm not going to get into that. That's a whole other conversation that we can talk about. But if you're doing that, you are going to need to be mindful not only of gifts in the year that you make that large gift, but also in future years going forward.
Okay, good to know. Katie, can we finally talk about what are a couple of sort of administrative things people need to think about when they're making these gifts? Because I know it is, you do want to do some things correctly in order for them not to accidentally go into a tax form or to trip on some small thing like that.
Yeah, sure. So one of the biggest best practices or things just taking consideration when you are making gifts, if you're making gifts as a couple, best practice is to write separate checks. So married couples obviously can both make gifts, but if you're giving it together, let's say, Anna, you and your spouse are gifting 36,000 to a child. If just you write that check, you're going to be the one considered making the gift. So to avoid having to jump through hoops and filing a gift tax return, best practice, you and your spouse each write your own checks. So by doing that, you're going to totally avoid needing to file a gift tax return solely for this purpose. A few other things to think about, Anna, if you're looking to make a more significant gift, for example, maybe you want to help a child or a grandchild with the down payment of a home. You could potentially consider structuring an intra-family loan to avoid getting into utilizing any of your exemption. And, other things just to be aware of to trust set up for grandchildren could trigger generation skipping taxes. Again, this is a whole other topic too that we're not going to get into here today. But if you are looking to make gifts to, generations beyond children, grandchildren, certainly it's a good idea to consult with your attorney and your team at Altair before doing that, excuse me.
Yeah, that's great. Okay. Thank you, Katie. This has been really helpful. One last thing before we end is one thing we also like to tell clients is when you're giving gifts of money, it's great to give it with either a conversation or even better, a letter about what your intentions are for that gift. Because I see a lot of situations where, parents or grandparents give a gift of money to the next generation, and then they're kind of disappointed with how it's used. So if you have an intention for that money, like we would like this, to go towards your nest egg for the future or towards your retirement or whatever it is, be sure to state that, or otherwise, kind of step out of the way and be okay with how it's used. So that's something.
Yeah, absolutely. I think that is a great thing to think about and a great thing, to consider and include with these gifts as well.
Yeah. Yeah. And we have some samples we can give to people if they're sort of like, I don't know where I would get started on how to write that up. Like we've got examples that we can share. Well, thank you, Katie, for being with us today and going through this. It's been really helpful. And for people that would like more information on this, you can look at the Our Thinking section of Altair's website. And this is one of our new blog articles, and you can go and download that. We appreciate you being with us today. Thanks.